Hey everyone! So let's talk about what's been happening in crypto lately. Ever since that major sell-off we saw in October, the market has basically been stuck in this sideways chop. And honestly, it's been pretty frustrating for a lot of us traders out there. I mean, think about it. We've gone almost the entire month without any real excitement or significant price movements. We've all just been sitting here, waiting for something, anything, to happen. Now I'm recording this super early in the morning, right before the traditional markets open. So by the time you're watching this video, things might look a little different. But as I'm looking at the charts right now, the overall crypto space is just quiet. Really quiet. Sure, there are a few altcoins making some moves. We always have those random outliers that decide to pump when everything else is sleeping. But if we zoom out and look at the bigger picture, most altcoins are just sitting there, flat as a pancake. It's like the whole market is taking a collective nap. Alright, so let's dive into the actual numbers and see what's happening with our favorite coins right now. Bitcoin is hanging out around that 109K mark, up about 1.1%, which is nice, but nothing to write home about, you know? It's just doing its thing, staying relatively stable. Ethereum is creeping closer to that sweet 3,900 level, which has got some people excited. But again, we're not seeing any fireworks just yet. And XRP? Still chilling around $2.40, pretty much exactly where we left it last time. So here's the thing. When I look at these prices compared to what we discussed in our last video, it's basically deja vu. We're literally in the same spot we were before. The market is just stuck. We're all still here, refreshing our charts, waiting for that next big move to shake things up. It's like watching paint dry, but hey, that's crypto for you sometimes. Now, let's take a look at the big picture. The total crypto market cap is sitting at $3.69 trillion. And when I zoom out and look at the past 23-ish days of October, it's like looking at a flat line. There's just been zero excitement, zero momentum. I know, it's boring as heck, and honestly, it's super frustrating. Actually, I was chatting with some of you guys in our Discord yesterday, and wow, the frustration is real. So many of you are telling me you're just fed up with this sideways action. You're tired of hearing people say, oh, alt season is coming, or just wait, big moves are ahead, when literally nothing is happening week after week. And hey, I totally get why that's annoying. Nobody likes waiting around forever. But here's the thing, and I've mentioned this before, crypto is basically the ultimate patience game. What's really interesting is that right now, we're seeing what I call time capitulation instead of price capitulation. What do I mean by that? Well, people aren't getting scared out because prices are crashing. They're getting shaken out simply because they're bored and tired of waiting. Time is doing the dirty work instead of big red candles. And honestly, we've got a bit of both happening right now, which just makes everything feel even more exhausting. Now, looking at some of the prices in this market, I just want to open up Bitcoin and XRP. All right, let's jump into Bitcoin first, because honestly, when we look at the past 7 days, it's been pretty much the same old story, right? But here's where it gets interesting. If you look closely at the chart, we're actually starting to see something pretty cool happen. We're forming these higher lows, which is always a good sign. And get this, we technically did hit a higher high when we look back to the 21st. Now, was it some crazy explosive move that had everyone jumping out of their chairs? Nah, not really. But you know what? A higher high is a higher high, and I'll take it. This might seem like small potatoes, but from a technical analysis perspective, this is actually really solid for Bitcoin's overall structure. These little building blocks matter way more than people realize. So what am I looking for next? Well, I really want to see Bitcoin start stacking more of these higher highs, especially on those bigger time frames. That's when we'll know we're really cooking with gas. What I'm really hoping for is to see Bitcoin break out of this sleepy phase and start making some serious moves upward. The first big milestone I've got my eyes on? Getting back above that 115,000 level, maybe even pushing toward 116,000. That would be a fantastic start and would definitely get my attention. From there, we've got some juicy targets to aim for. I'm talking about 117,000 as the next major level, and then this is where it gets exciting. We could be looking at 120,000 and beyond. But let's be real here. Over the past couple of days, Bitcoin has basically been taking a nap. It's just not doing much of anything right now. Still waiting for that spark to light the fire. Now let's talk about XRP. And I'm pretty sure you guys are already thinking what I'm thinking here. XRP has been absolutely mind-numbing to watch lately. I mean, seriously, It's like watching grass grow. There's just been nothing happening with it, and honestly, that's not really surprising at this point. Here's the thing I keep coming back to, and I've mentioned this before in previous videos. We're not going to see any real fireworks with altcoins right now, and XRP, well, it's no exception to that rule. Why? Because it all comes back to Bitcoin. Bitcoin is still the big boss that calls the shots in this market. Until we see Bitcoin make a decisive move and really start cooking, all these altcoins are basically just going to sit there and twiddle their thumbs. It's frustrating, I know, but that's just how this market works. Bitcoin leads, and everything else follows. All right, everyone. We're all hoping to see Bitcoin bounce back and reclaim those crucial support levels we've been watching. But before we dive into that, let's break down a couple of key things I want to share with you today. First up, let's talk about what's happening in the overall crypto market right now. If we go back to the crypto market itself, so if we check out the fear and greed index right now, we're sitting at around 28. And guys, we're still hanging out near those major lows we've been tracking. Now, what does this actually tell us? Well, it's pretty clear that retail investors are absolutely terrified right now. I mean, they're genuinely scared, worried, and honestly, they're panicking about what's coming next. But here's the thing. On top of all that fear, they're also getting super frustrated and running out of patience. And you know what? This might actually be the perfect setup we've been waiting for in this space. So let me break down exactly why this could be such a golden opportunity. All right, let's talk about the first major issue, liquidations. And honestly, it feels like we're seeing massive liquidation events happening almost every other day in crypto right now. Now, I actually made a video recently about how exchanges like Binance are straight up manipulating the market. And yeah, that's still happening, and it's going to keep happening until someone finally steps in. I'm talking about regulators potentially cracking down on these exchanges. But here's what I think is the real problem we need to focus on. All these traders jumping into leveraged positions and getting absolutely wrecked. The brutal truth? Way too many people are essentially gambling on these exchanges. And here's the kicker. These exchanges can see your buy and sell orders. Your entire trade setup is completely transparent to anyone who wants to trade against you. I've been saying this over and over again. So when we see posts like this showing over $370 million getting liquidated in a single day, this isn't going away anytime soon. But what's absolutely insane is that over the past few days, we've been getting update after update after update about these liquidations. And the scary part? The amounts being liquidated just keep getting bigger and bigger. Listen, I cannot stress this enough. Just hold spot in this market. You don't need to leverage trade to build wealth in crypto. I'm saying this loud and clear because it's that important. Now, on top of all that liquidation craziness, we just got some absolutely mind-blowing data from BorrowChart about money market funds. And guys, this is huge. I've been diving deep into money market funds for months now, and you know I've been talking about how important these numbers are. Well, get this. We're now sitting at a jaw-dropping $7.5 trillion in money market funds. That's an all-time high, and it's completely insane. Now, you might be thinking, hey, I'm holding crypto. Why should I care about some boring money market funds? Well, here's why this should get you excited. That $7.5 trillion, most of that is retail money. Regular people just like you and me. And here's the kicker. All that money is just sitting there, collecting dust in these safe, low-yield accounts. What this tells us is that there's an absolutely massive pool of liquidity out there that hasn't even touched the crypto market yet. We're talking about trillions of dollars on the sidelines, just waiting for the right moment to flow into our space. So here's what's happening. Money market funds just hit a record-breaking $7.37 trillion right before the Fed makes their decision on rate cuts. That's absolutely massive. These funds reached this crazy high in mid-October because of those juicy short-term yields we've been getting from these elevated interest rates. Now, according to the investment company Institute, the Federal Reserve is planning to cut rates by 25 basis points at their October 29th to 30th meeting. They're also expecting 2 more cuts by the end of the year. I'm pretty sure we're only looking at the October meeting and then December. So I think they're referring to those 2 cuts, which honestly makes perfect sense to me. But here's where it gets really interesting for us crypto holders. When those rate cuts happen, it's going to reduce the yields on these money market funds. And what does that mean? Well, it's going to push investors to move their money into more exciting opportunities. We're talking stocks, real estate, gold, and yes, Bitcoin. Now, I've seen tons of speculation on social media about these potential asset rotations. But if we look at historical data from past recessions, these shifts usually happen pretty gradually. They're not overnight explosions. But here's the thing, and people like Grant Cardone have been talking about this too. We've got $7.5 trillion just sitting there in money market funds. As rates start coming down, that money is going to start flowing out into other assets like gold, Bitcoin, real estate, and stocks. And honestly, I think crypto is going to see some absolutely massive growth from this. Let me tell you why. But before we dive deeper into that, I've got to share this absolutely fascinating update we just got about the US Treasury. And this is pretty wild stuff. So get this. The US Treasury just started buying back a massive $1.9 billion worth of its own debt. Now, this might sound boring, but trust me, this is actually huge news for us. This debt they're buying back, it's set to mature between 2027 and 2041. But here's the really interesting part. This is all part of their new expanded program that's designed to boost market liquidity. And guys, what this is essentially showing us is that we're witnessing quantitative easing happening whether the Fed officially does it or not. The Treasury is basically doing quantitative easing through the back door. But wait, it gets even more interesting. The Fed is actually already starting to begin their own quantitative easing program. We just got breaking news from the Coastal Journal with the headline, Fed Quantitative Easing Begins. So we've got the Treasury doing their thing, and now the Fed is jumping in too. This is absolutely massive for understanding where all that liquidity is going to flow. So check this out. The Fed's balance sheet just jumped by $10 billion in just 2 weeks. That's massive. But it gets even crazier. The Fed's discount window usage, and for those who don't know, that's basically the Fed acting as the lender of last resort when banks are in serious trouble. Well, that usage just shot up by a whopping 238% compared to last year. And here's the kicker. All of this is happening right after we're seeing banks announce major losses and serious collateral issues. This is like watching dominoes start to fall. Now, you might be wondering, why should I care about all this banking drama when I'm focused on crypto? Well, let me tell you exactly why this is absolutely crucial for us to understand. Well, here's where things get really exciting for us crypto holders. I found this incredible article from Cointelegraph that was written by Mr. Crypto just a few days ago on October 22nd. And the headline? When the Fed starts QE, Bitcoin goes parabolic. Will this time be different? Now that's the million-dollar question, isn't it? Because if history repeats itself, and we're already seeing the Fed fire up that QE machine, we could be looking at some absolutely insane Bitcoin price action ahead. And honestly, I don't think this time will be any different at all. Look at this chart. You can see exactly where QE started for Bitcoin, and boom, the Fed balance sheet starts expanding rapidly upward. And yes, Bitcoin is going to go absolutely parabolic from this. But here's the thing. It's not just Bitcoin we're talking about. XRP, Ethereum, the entire crypto market is going to see some absolutely insane gains because of what the Fed is doing right now. So why does this happen? What's really going on with quantitative easing? Well, it's pretty simple. They're literally printing money and flooding it into the system. The best way I can describe it is like they're opening up the floodgates of cash. And when you flood the system with all that liquidity, it's going to push markets way, way higher than they already are. Whether we're talking about stocks, crypto, or pretty much any asset class. Heck, we've been following gold too, though gold is looking pretty overcooked right now, which is why I've been saying it's topped out. But all of these markets run on the same thing, the liquidity cycle. I've mentioned this so many times before, so when the Fed starts up that QE machine and floods the system with dollars, assets are going to go absolutely crazy in value. And I'm definitely not the only one who thinks this way. Speaking of which, check this out. So check out this absolutely mind-blowing insight from Jesse Myers. And this is going to get you excited. He says the money printer hasn't been running this hot since COVID. Get this. The global M2 money supply is now sitting at a massive $137 trillion. Just 6 months ago, it was only $129 trillion. That's an $8 trillion increase in just half a year. That's absolutely insane. Now, here's what's really interesting. Gold has already started rallying in response to all this money printing. But Bitcoin, it's actually lagging behind, just like it did back in 2020. And that could be setting us up for something absolutely incredible. Let me paint you a picture of what happened in 2020. The COVID money printer fired up in March, and by the end of that year, M2 had grown by over 21%. Bitcoin took a little time to catch up. There was a slight delay. But then, Bitcoin went on an absolutely epic 6x rally from Q4 of 2020 through Q1 of 2021. So the big question is, what's going to happen over the next 6 months? Because if we think about this logically, the money printer has been going absolutely wild again. We've been tracking this, we've been studying these patterns, and the setup is looking eerily similar. And here's another absolutely shocking stat from Clint Russell that's going to blow your mind. Are you ready for this? It took over 200 years for America's national debt to hit $1 trillion. But get this, the national debt just increased by $1 trillion in the past 70 days alone. There are literally no brakes on this money printing train, none whatsoever. And you know what? This is actually the perfect excuse for us to be buying assets right now, because prices and inflation are only going to keep skyrocketing. Same thing goes for crypto and other assets. Now, I totally get it. When it comes to crypto, we're all obsessed with price action. We want to see those pumps happen as fast as possible. But here's how I want you to think about this. The entire environment around crypto is still incredibly bullish. Think about it. We've still got altcoin ETF approvals coming down the pipeline. We've got regulatory agencies like the CFTC and even the SEC that are becoming way more crypto-friendly. Plus, we're literally watching the money printer fire back up again. The Fed is eager to cut rates, and we've got their next big rate decision coming up soon. And even though price action has been rough lately, the crypto space is welcoming more institutional players than we've ever seen before. But honestly, I think the main thing we need to focus on is what the Fed does with QE, because I genuinely believe the Fed is going to make us extremely wealthy. I know that sounds absolutely crazy to say, but every single time that we've witnessed QE begin, which we're watching it happen right now, this has led to crypto going parabolic. Now, it's not an immediate reaction, but here's the thing. It does take a little bit of time for this to play out. And I'll be honest with you, Bitcoin is definitely lagging behind both gold and stocks right now. But mark my words, we're going to start seeing this really take off in a massive way as we head into the end of the year. The pieces are all falling into place, and the timing is setting up perfectly. And remember, all of this is happening while the fear and greed index is still hovering around that 28 mark, which is basically the same bottom we hit earlier in 2024. So honestly, and I know I keep saying this, but I think a lot of this panic has been way overblown. I wouldn't be too worried about it at all. Here's my advice. Just watch, wait, and see what the Fed does next week. I have a really strong feeling it's going to be incredibly bullish for us. But here are the key things I want you to keep your eyes on. First, watch for those factors that expand markets. We're talking about increased liquidity provisions and major announcements around Treasury buybacks or Fed actions. Second, keep watching that national debt continue to climb, because as debt increases, assets become even more attractive to investors. And that means crypto is going to see some absolutely massive inflows. All right, guys, that's a wrap on today's analysis. If this breakdown helped you understand what's really happening in the markets right now, smash that like button, hit subscribe, and turn on notifications so you don't miss any of our free content. You can also follow me on